Know me. My name is James Bishop. I've been in trading education for since I was knee high to a grasshopper. Now, 15 plus years now. I'm the founder of a managed fund where we do individually managed accounts, and that has just been absolutely amazing. 40% 2 years ago, 36% last year. Already on pace for another record year as well. I also do retirement and estate planning. I help people retire tax free. If you ever have an interest in that, I'm going to give you a link at the end of the webinar. If you want to join or into this session, if you want to book some time with me to learn about it, you can. I have my MBA in finance and global portfolio management. I am working on my doctorate in finance and economics as well. All that to say is this, is I host these sessions for you guys, not for me, right? I'm here to answer y'all's questions. So hit me with your best shot, as that song. I don't know who sang that song. Is a little before my time, but you can definitely ask any question you want in this webinar. I will try to weave it into what we do here. And there's a lot that I'm going to kind of discuss with everybody as well. Pat Benatar. Okay. If I was on Jeopardy, I would guess Pat, but I just wasn't sure and I didn't want to sound dumb. At risk of sounding crazy. I did not want to do that. So, um let's get on into it. The purpose of what we're here to do today, market insights, showcasing tools, talking economics, and learning from you all, right? So let's jump into some kind of news that we had. And I'm going to start actually last week, okay? Let me go here. Because last week we saw something come out that I definitely want to talk about. If we look towards Thursday, good old Thursday at 8:30 a.m., we had an announcement that GDP negative again. Okay, quarter over quarter growth. Frank, good to see you, buddy. Um, David, there's a joke in there. But I will get to that for sure today. We will talk about that. Okay. There is a joke, preliminary GDP, right? So GDP came in again negative. Now, the traditional definition of a recession, okay, the traditional of a definition of a recession is two negative quarters of GDP growth, right? That's the traditional definition of that. We're going to go over in just a bit about what the US really considers a recession. But I wanted to touch on that. We're going to talk about the PCE price index, right? We had higher than or lower than expected inflation. That does not mean there was no inflation. It just means that it was less than what we typically had seen. And this should bring down the target of inflation down to, around, I think it's at 2.1%, which is around what the Fed Reserve wants to see for their target rate before they potentially start lowering interest rates. But my good friend Jamie Dimon, maybe you've heard of him before. He kind of runs this small bank called JP Morgan Chase, just he and I we went to separate high schools together. So but he's definitely a man in the know, a man with the ability to move markets with just a couple trillion $1 trillion under management, whatever. But so we'll talk a little bit about what he says as well with a crack in the bond market, meaning bond markets aren't looking like they should. Okay. The other thing that came out in the ever ongoing saga of uh, uh, um, tariff world, right? We had President Trump says he will double tariffs on imported U.S. On imported steel and aluminum to 50%. Says move will even further secure steel industry in the United States. With Nippon, the Japanese company, looking to invest in slash purchase U.S. steel. It is a kind of interesting. I don't know what you call that. Okay, if you have a U.S. steel manufacturing, but it's owned by Japanese, is that Japanese or is that American? I don't know. It makes my brain hurt to think that way, right? It's like too many if then this who owns what kind of deal. So, the goal is to protect U.S. steel, right? The goal is to protect um U.S. steel, right? It is a very interesting thing. This is kind of the outcry of it, though. This is where things get bad, to say the least. You have other countries right now that, and we're not far off. Let me go ahead and forewarn that. But in Canada, right, catastrophic job losses for and factory slowdowns and supply chain complications as well could happen. Okay. You've had every major retailer from Walmart, Target, Amazon, even minor retailers, Gap, Banana Republic, um, all of these retailers are Tesla, Nvidia, Apple, all of these retailers are singing the same song. And when everybody's singing the same song, just make sure, okay? Just make sure that you are listening to the song they are singing. Every retailer is saying prices are going to have to go up if these tariffs do get realized, right? Because I'm not sure if we fully, I don't think I've ever kind of covered this, but I'm sure by now you've heard it, right? So let's say you have China on one side, and then they're shipping to US, okay? And I don't care what it is they're shipping. iPhones, whatever it may be, okay? If if the product is landed in the US, okay? So if it's landed in a US port, so the Port of Freedom in LA or Houston's port, Miami, New Jersey, Philly, all these ports that we have, if it is landed in the US, the US based company pays that tariff. Now, here's some just real rocket science 101 for you. Okay, let's see if y'all can figure it out. If the price of if the input cost of a good goes up and you own the company selling the good, do you raise price, lower price, or keep it the same? So if let's just say you own a pencil factory and the rubber costs more, the aluminum costs more, the graphite costs more, the wood costs more, your employees have to be paid more, and you need new machinery, you're gonna have to raise your prices. It just is what it is. Now, what's eventually gonna happen is high prices will fix high prices. Okay, I'm gonna just go ahead and say that right now. High prices will fix high prices. It just is what it is. Um, and because what'll happen is it will reduce consumption so much for your product or whatever it may be that you may not, that it will lower your sales, and it may be better to have smaller margin and higher sales. So they'll test that for a little while, right? Just like what Jeep did, right? Stellantis Motors did that with Jeep and Dodge because they were literally having 2024s on a lot 2023 is on the lot, 2024 is on the lot, and 2025 is coming on the lot last year. And so they needed to move cars and they had their cars priced way too high. So they dropped massive incentives instead of lowering the price, they just gave massive incentives so that way consumers could purchase their vehicles again and pay less for those vehicles. Okay. Let's see. Sometimes don't they split the cost between manufacturer, importer, and retailer? Um, Al, I hate to say this, no. It's rarely done that way. Like that is the rarest of the rare of the rare. And the only time that actually occurs is if the manufacturer, the importer, and the retailer are all owned by the same company. Like Procter and Gamble or Unilever or things like that. They own their manufacturing, they own the importation, and they are the retailer, right? So they will split the costs amongst those three businesses, but all three of those businesses are own the same product, so it'll still get passed on to you. It doesn't really they're not gonna just reduce their profit margins after having all-time high profit margins because of what? Because they like us, you know, like because they like us. So Um, let's see. The country selling the raw materials technically can lower their price to compensate for the tariff on the buying side. In theory, you're absolutely correct. That's a big thing right there. They could lower their price. They could devalue their currency. Are we not late in the cycle of growth? Hence, the slowing of growth should be expected. Um, yes and no. Okay, so here's the thing. Recessions are normal. They happen. They can be deep, they can be big, they can be massive, or they can be small as well. Now, but, okay, the thing that we don't want to see happen is our yearly GDP to be negative, because then you get into some really big concerns, okay? And so that's the only thing that I would say is like we don't want to see negative GDP because for too many quarters because then it's going to not be pretty for and we'll go into GDP here in just a little bit. That's actually one of the things that I have queued up in my slides to talk a little bit about. But I wanted to hit some of this other news. So the other thing that happened was on Truth Social, Twitter, I don't know, whatever. One of the social medias, the Tiki Talkies or the YouTubies, right? Um, and it is the basically President Trump said, tweeted, whatever, and explicated to us that China has um basically not followed through with that kind of stay of things. So there will be some sort of retaliation. We didn't see what that was. So there's just a little bit of kind of uh there could just be some sort of volatility that comes from that in the market this week. Let's see. U.S. efforts to keep China on its back foot, tech race not working, debate heating up about whether or to dial back export controls or ramp them back up. This is a really interesting thing because, you know, dialing back export controls and controlling who has what AI wise, well, think about it this way. If, let's say, we say you cannot export your technology to China, but let's say you can export your technology to Panama or Mexico or Abu Dhabi or Qatar, and they do business with China, and China just buys it from them. What's what's stopping that? Right? Those are the things, right? Um, those are the things that we have to be considered, right? So, no, William, that's the steel tariff. That's the steel tariff. Okay. So steel and aluminum is going from 25% to 50%. And that's on the European Union, not to China. China, it was 150%. And then they set called off all tariffs when they negotiate. And this week, supposedly, we should see President Xi and President Trump get in the same room and hopefully figure it out for us all. Right. That's what we hope to see happen. The other thing is, and again, guys, look, I'm gonna go ahead and say this. This is not a political thing. I do not care what your politics are, whether you are pizza party, birthday party, house party, backyard barbecue party, Christmas party, Happy New Year party. Does not matter what kind of party you want to be a part of. This is all about the money making party. Okay, this is about making money. This is the greenback party, the price action party. That's what I care about. Okay, Central Bank of South Korea cutting rates faster than projected 2 months ago. So is Mexico. Ford, you're correct on that. And then you also already saw New Zealand cut rates, Australia cut rates, Europe cut rates. We're the country with the highest interest rate again in the US. So, are in the world. So, yep, Scott, you are correct on to Canada as well. Now, let's see. Ah, here it is. Trade continued to dominate, accused, and U.S. plan wider tech sanctions. Nevertheless, focus on taco trade, technology. I can't remember what the ACO is, but this is just an interesting thing. And let's see what else. That's kind of the main things economically I want to talk about, with especially with this recession stuff. So I kind of want to get into, what's the deal with the economy? I mean, I swear to you, how many of you guys, just like me, when you guys watch, okay, NPR, is what it is. I'll tell you what I do. How many, when you watch the letter channels, whether it's NBR, NBC, MSNBC, CBS, PBS, ABC, BBC, CIA, CTA, CFA, or maybe the Future Farmers of America, the FFA, I don't know. Any piece of news, any news coming out, it feels like America has more problems than a math book. Do y'all agree with that? Yes or no? Right? Exactly. You know, guys, it's crazy. Look, there are some good things, there are some bad things, there are some concerning things, and it's our job not to buy into all of the things. Now, where I typically get my news, you guys, look, I will never tell you anybody to buy this. This is like $25,000 a month. The university I manage an endowment for fund for, they give this to me for free. Okay, so you guys get to benefit from that. So y'all don't have to do that. What this does though, right, is you notice that this doesn't have any like opinion in here. This takes the news and it says, this is the fact. And then it goes on to the next thing. There's no opinion in there. And that's one of the things that I'll have to tell you guys is that when you're reading news, okay, when you're reading news, what you're going to want to do is like, hey, the US economy shrank in the last 3 months by 0.9%. That's a fact. This is the second quarter, consecutive quarter where the economy has contracted. That's a fact. That's a fact. Right now, then there's going to be some opinion in there. Okay. It's interesting how this stuff works, but just try to separate facts from opinion. And that's going to help you, one, put your mind at ease. So here are some certain things that have happened, right? We have had 2 quarters of negative GDP growth. We have tariff issue going on. We have onshoring of manufacturing potentially still happening, right? A lot of companies say they're doing it, but we haven't had any investment into plants. We haven't had any massive land acquisitions, and we haven't seen any manufacturing coming. We do have some issues with car manufacturers right now. I'll tell you about that in a second. Right now, additionally, there are 6.25 million people 3 or more months behind on their mortgage. Okay. There are 6.25 million people in the United States 3 or more months behind on their mortgage, and 9.5 million people 2 or more months behind on their rent. We also have recession fears. So let's talk about that part of it. How do you know if there is a recession or not? Right? I, well, it used to be, let me say this. All them letter channels I talked about, if you listen to them, they're going to say 2 quarters of negative GDP growth is what a recession is. 2 quarters of negative GDP growth is what a recession is. And yes, that's true. That is part of it. Because in the US, it's a little bit different. Someone said, hey, where'd that? So here's another thing here. This is from a Bloomberg terminal. Okay. This is another tool I get access to. This was 2008. Okay. This was 2008 right here, this pink circle. This is where we are right now with mortgage defaults. It's kind of important to notice. All right. So just, I'm not saying this is going to happen tomorrow. I'm just saying prepare yourself a little bit, right? The other is unemployment rise. That's going to be measured through non-farm payroll first Friday of every month. Some people say, hey, employment is okay. Yes, it is for now. Because what has happened that we know of? Well, we know government agencies have shut down because they cut some government spending, but then introduced the bill that spends more than the cut was. So I don't even get, it's not really a cut, is it? But anyway, they cut the size of government, laid off a number of people. You had 80,000 people get laid off from the Veterans Administration Hospital. You had and you had a bunch of those kind of jobs. Well, here's the big thing. One, they're not going to show up for in the first month when they get fired. Because first, it takes 6 to 8 weeks post any, you know, payout or golden parachute or whatever for those people to show up in our unemployment numbers. So that would be this month and next month and the month after. June, July, August, that's where you need to be focusing on unemployment. It hasn't been counted until now. The other thing is you have companies like Google, Facebook, Netflix, Amazon, Apple, Rocket Mortgage, all these companies, they're laying off individuals as well. And those will slowly trickle in as well. So we'll see unemployment claims begin to tick up. And I'm going to show you guys where to look at that and find that information. Right. The other thing that's a little scary, and I don't know this. This is in the farming industry, so let me just say that. Okay, is if you look at the farming industry, so when there was an executive order signed right as the president came into office that stopped subsidies to farmers. Well, a lot of small farmers are, because we are not exporting anymore as much anymore, farmers are not being able to hold on to their farms. You can go look this up. It's like a massive deal. I think I actually have it somewhere. Um, let me see if I can find it real quick. But anyway, while I'm talking, I'll do it. Right? So farmers, yeah, this is it. So over 30,000 farmers have had to close their farms, right? Because they were missing now these subsidies that they were receiving, and so they don't have the funding, okay, for that. So farmers are going to eventually show up in unemployment numbers, and who knows what happens there. Like I don't know that outcome there. I'm just telling you that. I don't know that outcome there. Right? I've not seen that in history. There's only one area to study for that, and I'm not going to go down that rabbit hole. Consumer spending decline. We haven't seen that yet. It's consumer spending has been a little less, but not like, way out of the norm less. Production and sales stagnation, that has been kind of slightly up. Okay. Slightly up as well. Inverted yield curves. Now, we had an inverted yield curve for 744 days, the longest it was ever, the longest in US history. But it's not when it's inverted that we have a recession, and it's when it reverts or unverts or whatever, goes vert again, that's when it has a recession. These are the markers of a recession right here. Okay? Screenshot it if you want. Take a picture with your phone, doesn't matter to me. And you guys will have that, okay? Um Bryce, great call. We're gonna look at that chart. Great call. Bryce just sent me a message. It said, you know, Basent said in an interview that China issues because China continues to hold back rare earth metals. They agreed to open up earlier in the month. Would this impact metal futures? Yes, it could, and we're going to take a look at some metal futures. Copper, maybe not so much because the majority of copper is actually exported from Chile. If you didn't know, it's a random thing. But so, you know, who knew, right? Who'd have thunk it? But we'll look at some earth metals here in just a second. Um, Wanted to then go into GDP, right? GDP is a formula. It's it's GDP equals C plus I plus GS plus XM. I don't know where the other parenthesis went. It was there and now it's not. Consumption plus foreign direct investment plus government spending plus net exports minus imports, which is net exports, right? So you know, it's been negative for the last 2 quarters, with currently not a sign to show turn positive. So GDP decline will eventually lead to less confidence of consumers and investors, which leads to less consumption, which means that stocks go down. Now, I'll tell you guys, look, the clients that I work with, and I know Bryce is one of them. Andrew, we're working on with you as well. And I see, you know, Calvin, Carrie, good to see you. Matt, good to see you as well. Don Ford, you know, a lot of you guys I've definitely sent some invites to about this stuff. But the clients that I work with, they don't care if the market falls because they lose nothing, right? And I really want to draw your attention to the bottom stuff, okay? Warren Buffett, Michael Burry, Ray Dalio. Ever hear of any of them? Yes or no? Ever hear of any of these three guys? Warren Buffett, or Buffet, if you will. No, he doesn't own Golden Corral like I thought when I was a kid. Um, Michael Burry and Ray Dalio. All right, and that is the truth. I asked my mom once if Warren Buffett started Golden Corral, and that's how he got all his money when I was like 4 or 5 years old. Okay, but anyway, these guys. So Michael Burry famously shorted the housing market. He has billions invested. Ray Dalio, he was the former chief investment officer, is now retired, of the largest hedge fund in the world. And Warren Buffett, we know who he is. All of them are holding more cash than they ever have before. You know, Warren Buffett, I think in Berkshire right now is sitting on like $400 billion worth of cash. Michael Burry, literally in his last 13A filing, which was last week, he disclosed that he sold all positions except for like five or six. Everything else is sitting in cash. Ray Dalio has the hedge fund has moved into cash. All right. And this is something. Okay. You know, cash is a position. Remember, your name is in here as Freedom, so I don't know how to address your name, but hey, Deward, you'll see that. I'm going to tell you that why it says that, right? Okay, so here's the thing: is that when you're in cash, okay, if you are holding cash in a specific type of investment account, you can make that you make 4%, 4 to 8%. I don't know if you knew that or not, but you do. So that's something that you can negotiate depending on your brokerage, et cetera, et cetera, et cetera. Depends on how you hold it, et cetera. But you can make 4% on your cash. They're not holding it in gold. They're not holding it in options. There's no hedge bets on that or anything like that. It's literally straight cash that they're sitting on because they want to find that next black swan event, right? That next thing that's going to happen. So let's dive in now to the markets and let's go in and take a look at what we could potentially see. So I'm going to first start with the S&P here, okay? And actually something just went away. Hold on one second. Let me while I'm doing this, give me a second here. But on the S&P, unless it's here. Nope. I get signed out of this. That's my vortex. Nope. Okay, give me one second, guys. Something went away, and I was really hoping for you guys to see this. So I don't want you guys to miss out on what I'm gonna show. Give me one second. Hmm. I missed something. I did. All right, that is very odd, but okay, can't get it to work. I'll have to fix that later, unless I can just do one other. You know, you do all this work. I hate it when it happens, but you do all this work and then it it doesn't work. Nope. All right. Not gonna work, so we'll do it the old way. Okay. So, um, right now, this is the S&P 500. I have it on the SPY. We can do the SPX if you want. So SPX really quickly. What I'm gonna first and foremost do is, well, one of the things that I noticed about this chart is that if you come out here and you draw a outer trend line from way out here across the bottoms, you actually never, I mean, the it wicked below this outer trend line, but it never closed below the outer trend line, which is very interesting to see, right? It never closed below that inner trend line. So, while we have had a significant pullback, and yes, there is reason for that. You have a really outer fib right here that has pulled back to this blue level, which means that the D extension would be at this blue level. That is right here, right? You look at that and there is That's the potential de-extension right here, okay, of this fib until it breaks, if it breaks. And we have a sub fib. We had one here, and we had one here, right there. But at this sub fib, and I'm gonna undo that really quickly, and I'll add it back later because we actually have a couple of gaps that I want to identify. Okay, so I will add in. There's that. There is that. And excuse my dogs. The wife just got home. I knew that was going to happen while I was talking. But we have a few gaps in this market left to hit. One is way down here at this pink line. And there's actually one more even further down there. Those are your largest, those are the last four gaps on the S&P 500. Okay, those are the last four gaps. I believe that we will see these two gaps filled sooner rather than later. I also believe that this will happen over the next few weeks and months, right? Over the next few summer months, I think that we get a pullback down into here, at least a 5696. And I could anticipate this falling back down here, filling this gap at least, and maybe even down here to 5317 to fill this gap. We know that the market waves like that, okay? Um, um, and so that is where I see the S&P going. Could we break up to this all-time high at 6,500? Yes, I could potentially see that. Now, when I add on some my moving averages that I like to use, as well as another tool I like to use in Hedge Fund Trender, we'll start with moving averages first. So adding on my moving averages, we see that, hey, the 200 period moving average, the 50 and the 20 are above the 200 period. The 144 is above it as well. And so we understand that, hey, we're still in a buying cycle, right? We're still in a buying cycle. And how do you determine a buying cycle? Well, if the blue line is above the red line, then we're buying. If the red line is above the blue line, then we're looking for sells. And if it's above the pink and the black, then we're still buying, but cautiously. If it's below pink and black, then we're selling all day, every day. Right. So right now, just I'm going to remove all drawings really quickly. Hide drawings. You can see that we're above the black, we're above the pink, we're above the blue, red is about to be across the pink, and that is about to move. This is a daily chart, okay? This is a daily chart. If I want to look at a weekly chart, yep, we can look at a weekly chart really quickly. Weekly chart, again, all buying all the time. Still have a gap right here. Still see this gap filling. Still have a gap in this as way down here as well. I still see that filling over time, right? I 100% do see this filling over the next few weeks to months, if you will. The next thing that I will now re-add back those drawings. So my long-term target is 6504. And I think that's going to create some buying euphoria there. But I do see short term, this is going to potentially fall. Now, I want to get into gold. As we see, we talked about gold last couple weeks ago. And that gold trade that we had set up, I know one person took that gold trade, at least in their demo account. I don't know. Did anybody else take the gold trade that we saw where we were in it? Bryce took it, made some money. That's awesome. Love it. Let me reset this chart view. So what we saw, we identified this gap. We saw an opportunity to buy. We identified the opportunity to buy, and we took the trade, right? I'm going to hide. Well, I'll leave these on. I'm going to add this on. So right now in gold, what do I anticipate and see happening? Well, we're above everything for buying, but I want to check in on market energy because that also helps. So we see that buyers are still kind of in control. And then the other thing I want to take a look at is this right here. Oh, well, I'll just wait till it loads on. Oh, there it goes. Um, Let me go to membership home, Trend Insider, charts, GC, which is gold futures. So I'm going to look at all years here, right? Because we have 1975 to 2025, the last 10 years, and the last 20 years. And this is where we are today. I'm not going to take that into consideration today. I want to look at historically, where are we? So here's May 30th, 31st, June 1st, right? We see that we are looking for a rally in gold all the way till about June 6th or 7th. And then really from about the 9th to the mid June, it's kind of been a fall and just kind of consolidated all around this month, right? We can see if I look here, there's consolidation, consolidation. And that's what we may see in gold, right? Is consolidation. So what a way to play that would be using something like Vortex. If you don't have Vortex, it's totally fine. Join a webinar this week with Tyson. You'll see Vortex, and you could place trades on gold futures with options and not care which way the market moves and be able to make money. If you are trading on like a short term, this could be like a true short term scalping trading opportunity, right? Where what you're going to look for is, hey, 5 minute chart. I have gaps in the chart, right? Let me hide, 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 and hide. I have a big gap right here, from this point to this point is a gap. We have sellers in control now. HFT tells me sell. This is showing sell. So I'll short this, but I'd only short it for a few ticks at a time, right? This is how I like to trade when direction isn't really, very obvious or prominent. Is I will take a few bites out of the market, right? If I'm selling it, I'm going to look at, I'll just connect a paper trading account. I thought I had to connect to sell. So let's say I'm selling gold futures, right? So I hit sell. I look at this and I say, all right, if I go for 10 ticks, I'll make $100. Well, if I do 10 ticks 10 times, then I'll make $1,000. I'm good to go. I don't have to worry about it all, right? So let's look at like palladium. Palladium. There's platinum. There it is. Palladium. We'll just start with platinum then. There's platinum as well. One trade I am very, 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 very long term focused on. I'll tell you this, just so you know, is silver. I'll tell you about that in a second. So platinum, if we look, it could pull back down to 1,043, fill that gap. There's no real gaps on this 15-minute chart. Let's look at an hour chart of it. Yeah, I could see it filling this gap down here and then rallying back up, to see a little bit more rally. We saw buyers in control here though. So I would not, I would be looking for buying opportunity on this before I would look on selling opportunity if you're on the 1 hour time frame. Okay. And now let's take a look at copper. Right. Looking at copper again, gap down. Sellers are buyers are starting to leave, right? Buyers are starting to leave. If we get an indication that sellers are taking control, then we'll look for a short. Again, 10 ticks, 15 ticks. That's all you're looking for, right? 10 ticks to 30 ticks. That's all you're looking for if you're trading futures. Um, let's check in on a couple of stock trades right now. OKLO. Did anybody take the OKLO trade that we called a couple of weeks ago? Yes or no? A couple of weeks ago, I said, "Hey, look, time to buy this thing. Let's get in it." It was I'll go back to a daily time frame. It was at $38 and some change or something like that. Options, yes. Waited for a pullback and it didn't. Closed out a debit spread. That's awesome. I love it. So look, we saw it rally up, right? Go from 38 to 57. It's pulled, it's beginning to pull back. Yes, Friday it closed a little bit higher, but I closed out my position, full disclosure, and I'm waiting until about 40 bucks to enter this thing. Waiting for about 40 bucks to enter this thing. At 40 bucks, I'll set up a position and I may add to the position if it reaches 32. All right. I may add to the position as it reaches 32. A trade that I would be cautious around is good old Tesla, if you will. Tesla, so again, I don't have all of the sources in front of me. I have I have seen several articles, and this is what kind of led to this. Part of the reason in an interview that Elon had left the government is he said he was using ketamine and other drugs and Adderall and all this, that, and the third. And that, it didn't do well for investors' confidence, to say the least. Okay. So I think Tesla sellers are entering in control. We just broke below the most recent high. So we broke, well, this is what you would call a bearish candlestick formation. There's a couple of gaps left in Tesla, right? There's gap one is right here on the daily. Gap two is there on the daily. And the other gap is down here at like 221 or 147, right? That's the last gap that remains on this chart is the all-time low. So how would I play this, right? Build a little bit of a position if you're looking to buy. But if you're looking to sell, do something with a put option or where you take a credit spread or a debit spread to kind of offset any risk higher. Okay. Let's see. I use Tasty Trade and I use Trade-O-Vate. If you haven't heard of Trade-O-Vate, Google them. They are amazing. Okay. They are amazing there. And so I will just tell you, just be cautious with Tesla if you're going to trade it. Let's look at Disney. Disney, we looked, oh, that's Intel. What am I doing? I just saw blue. Here's it, Disney. So Disney, I've done that so many times now. Enough that I need to take that off now. So Disney, we are looking, right? We had the put last week and it rallied up a little bit this past week, but notice we did not break a new high. I am telling you, set up yourself for some fade the gap conversations around Disney. Okay? Set up some fade the gap conversations around Disney. I'm very, very this is something that I would be looking at. Your lows in Disney is 93 and 106 and it's sitting at 113. This is something that the reason why it popped up, right? They had better than expected earnings, higher than number of subscribers because they've consolidated things across multiple channels on their subscription service in Hulu, ESPN, HBO, Disney, whatever, right? They got all the things in there. Um, and then they're seeing a revisiting of parks. Okay. Disney, here's the thing, Sylvia. There's not a big season trend on Disney. They're a tech company. They own a lot of media. They're sports year round now, and the parks are having record highs. So no, it does not SP. It does not have to break that upward band. You're just really looking at the blue dot, red dot kind of deal. Okay. So I'm looking for a red dot formation and let me know time to potentially sell. 93 in 106 is where I'd be looking for to sell this thing off. A great tool. If you don't have access to it, join a webinar this week. There's an indicator called Vortex. I'm going to add it to the chart. I'm going to hide all the other. And what Vortex allows you to do, okay, is it's actually really, really simple. You literally, if it you have an outer band limit and a lower band limit, and it tells you kind of what strikes to buy on Disney or not. Now, another stock that I'm gonna talk about here today, I'm gonna hit Paycom, and I'm gonna take off the Vortex for a second, and I'm gonna add on HFT. And this is a stock that has some bearish opportunity. Okay. Looking to buy a put. I think now is a great time to potentially do so. You could buy something at the money. You could do something with a spread. 229 is my low target for that. Just kind of back into this area. That would be a $30 put opportunity. And then there is a lower gap if down here if you're really inclined to go for 175. I think that there's definitely an opportunity in this for a pullback. Now, long term, I do see this, filling up here at 366, but I don't see it filling that before coming back down $30. So be looking on the lookout for that, right? And again, you got to take these at your level when you're ready. Don't just rely on somebody else to tell you what to do. If you see the opportunity to take it and you're comfortable with the risk, you take it. There was one other. Let's take a look at SMR that I wanted to look at. And while I'm doing this, I want you guys to type in a few stocks and things you guys want to look at because I don't have too much time. I got another presentation with another group here in a little bit, and I can't miss that as well. So, let's see. So yeah, that's called market energy. And look, guys, here's the thing. Look, I'm gonna just tell you, if you guys have any questions about the indicators or anything like that, how about this? jbishop@1fl.com. This is my personal that's my personal email. Shoot me a message. Be glad to help you, and I'll get you to the people that can help you. I'm not here to sell anything, so just let you know that, okay? Not here to sell anything. So PLTR, I think PLTR is gonna fall. One, they're just extremely overvalued. Not lightly overvalued, they are extremely overvalued. Here's what I think may push Palantir down. Palantir, it work with the US government, has expanded to compile data on you and me and everybody. Okay? You, me, and everybody is who Palantir is going to be looking into. And they're going to be compiling and merging data on citizens. Well, first of all, to me, that sounds like a ripe opportunity for somebody to start trying to hacking. I'm just going to say that. I'm just going to say that. Don, it's James. It's James. Maybe I'll just go by Jay. Maybe the people remember that one better. And it is, but I don't typically share them. I do post it later, but yes, I will. I'll let you email me, Don, and I'll let you know. Okay. So I personally think that I'm more now waiting for the sell side bias in Palantir. I'm looking at a price target, a push down of 96. Okay. Yes, that's FL, like Florida or financial. One Life FL. Okay. I'm looking for a push down towards like around 96-ish is where I'm really anticipating Palantir. I love the company, but compiling data on American citizens, that's going to be how do you protect that data? You've just told every hacker in the world that you're going to be doing it. How do you fight against all of that? How do there's just so much that comes with that and so many fears around that, hey, is what it is kind of deal. Couple others, FNKO. FNKO. Funko. Is that like the yeah, I guess it's the toy company, right? Um, mm, maybe a little bit of a pop-up. I mean, company this undervalued, right? They should never have gotten to like, 30, $40. That's just not where they're gonna live, right? I think let's see, what were their earnings looking like? They missed revenue. Okay, they missed, beat, double miss. When did they miss here? May. And what was the next? That was a beat. So I'm okay if you're in it, but just know you're going to be in it for like 90 more days until they have earnings again, because they'll probably beat earnings and quote unquote right the ship. But I mean, I just think that these are like a luxury and a not a great thing, right? So, not a big fan of luxury. Data mining has always been Palantir's business, but they're data security as well, but they're also not doing it on people, right? So I'm not a big fan of that. XLV, well, let's see. Healthcare sector is down now, but I anticipate healthcare to come back. Yes, it's down from the all-time highs from COVID and all that. We're kind of normalizing. We didn't get into bonds as much. So here's I'll do a quick thing about bonds and then we'll wrap this up. All right. So the bonds, the reason why bonds are so important is they give the value of everything in the market. There are things called dividend discount models, free cash flow models, things like that, that are built using what's called the risk-free rate. That is we're not going to default on this rate. Okay. That's why bond markets are so important, because it helps with credit of the government. It helps with various other things as well. It helps price securities, and that's the money, the rate at which the Federal Reserve lends money to other banks and institutions. And so bond markets, though, are starting to crack because yields are so high. One of those options, yields are out of this world comparative to what they should be with yield curves. Oh, the data isn't live on the weekends. Okay. So yield curves aren't looking the best right now, are looking too, they're providing too much liquidity and they're too high. So bond values are less attractive. And that means our debt isn't going to be purchased, right? Well, the other thing and a lot of people didn't understand this, but tariffs, okay, created a trade deficit. That trade deficit allowed people to purchase bonds. And then lastly, there's one other thing that I'm going to share with you guys. This year, roughly $9.2 trillion is coming due in bonds. This is called a maturity wall. It is one of the largest maturity walls that we've ever had in history, if not the largest. And that's a little scary considering that there's no actual government savings and other things like that. So this is, it can be a little nerve-wracking. Nvidia, I think, continue to push down a little bit, honestly. I think it's going to come back into the 118 level. Okay. So there's two choices when it comes to bonds. The Federal Reserve can either raise rates or print money. That's about it when it comes to controlling bonds. So the Fed could raise rates, and that is a could be a massive issue. They could print money, which will create more inflation, which means would lead to larger interest rate raise. So we're kind of like in a catch 22 right now, right? Now, I have this slide here, and I said, do my client care if the market falls? No. Do we care if the market falls? No, because it creates volume and opportunity. But I don't not care, right? I care because it means retirements suffer and different things happen. Now, look, I have some things that are unbelievable right now, right? There's one tool I have that is giving a guaranteed 30% bonus when you on all deposits, and then a guaranteed 9.5% return every single year. That is 100% guaranteed. You'll actually sign a contract with that. I also have our managed fund that is up, and we are very actively in managing money. And then additionally, I have other tools and resources that can help protect you in this kind of uncertain time. So I always offer this, and if you want to talk more about these tools, I'm going to send you guys a link. It's actually this link that I didn't copy. I'm going to send you this link right now. Book time with me. If you want to talk, we can talk about anything that you want to talk about, show you things that we want to talk about, and follow up about these things. Or you can also use your phone and you can use that QR code. It works. And you can book time with me there. That's it for tonight. We'll be continuing these sessions every single week. You guys will all be registered for the next session automatically. And so be on the lookout for that. That'll be next Sunday. Now, I will tell you Sunday, June 22nd. Okay, Sunday, June 22nd. We will not have a Sunday session. It's my in-laws' 40th anniversary, and I plan to be with them at their celebration. And I love y'all, but I got to make sure I'm good in the inheritance standing. No, I'm joking. I'm joking. Because where there's a will, I want to be in it. That's the joke I always say. But obviously, I want to be. I'm family. I obviously need to make time for family as well. So. Sunday, June 22nd is the only one we won't have, but next week we will be here. The week after we will, and we'll keep this train rolling. I hope you guys are getting value out of this stuff. Book time with me. It's we'll talk about your retirement and asset management. That's where my real passion lies is doing that as well as trading. And I want to thank all of you guys for joining. So I will see you guys very, very soon in a webinar this week. Okay. So love you, and I look forward to seeing you guys in a webinar this week. Have a good one. And Tony, I'll see you on Tuesday. Peter, we need to set up a call. If you want to book, go ahead and book with me as well. And all of you guys, and Michelle, I look forward to seeing you this week as well. Sylvia, thank you. Let's see. No, they're not 7 a.m. I'll double check that. I'll check that, Alonzo. Should be 7 p.m. Let me check that as well. Have a good one, guys. Thank you for letting me know that, Alonzo.